Aloha, everybody. Thank you so much for joining today. Welcome to Indiva Empowers, our monthly webinar series here at Indiva Advisors, where we're trying to give you guys the best information to make sure that you guys are staying compliant and on top of your financial side of your business, and making sure that you can help grow your business and be able to reach all of your goals that you have for yourself in the cannabis industry and beyond. My name is Kaliko Castillo. I'm the co-founder of Thunderstorm Strategies. I'm going to be your host today for today's webinar. Really excited to be hosting today's webinar with our managing partner at Indiva Advisors, Jessica Velasquez. Jessica's joining us from Benzinga. She's down in Miami right now, so really appreciate her making time to be able to share some of her knowledge today. Jessica, welcome, and thank you for making time.
Yeah, thanks so much, Kaliko. Excited to be here, and again, kicking off the second month of our webinar series.
Yes, absolutely. And then we have another Indiva Advisor rockstar here today, Gina from the back office, Director of Accounting. Very much appreciate you joining us today to help us through learning more about BOI reporting changes, what it is, how we can make sure that we're staying compliant. Gina, do you want to go ahead and introduce yourself to the folks? Appreciate you joining as well.
Yeah. Hi, everybody. I'm Gina. I am the Director of Accounting for Indiva. I oversee all bookkeeping and accounting projects. May have the opportunity to work with many of you, so happy to be here.
Oh, excellent. It's a day after tax day. Hope everybody survived. We made it here. So shout out to the whole Indiva team who's been working hard. I know working hard every day, but obviously trying to rush towards a deadline. Today, we're going to be talking about something that's not tax related, but is very important. Does have something to do with making sure that your business is staying compliant, and ultimately making sure that we have transparency across the financial side of things. And really, we're going to be dealing with FinCEN today, and we'll explain more about what that is, the Financial Crimes Enforcement Network, and what that means for you and your business. But we're specifically, today's webinar, focusing on business ownership information reporting requirements, or BOI for short. And so for folks who don't know what BOI is, just like, what exactly is it? Why do people need to know about it? What is it that people need to know in this moment about BOI reporting?
Yeah, so great way to sort of start this webinar, Kaliko. And for everyone out there, just a little bit of clarification. So BOI is the beneficial ownership information. And so, as you mentioned, Kaliko, not tax related, but this is a new reporting requirement that is effective for 2024. So as of January 1, this rule went into place, and a lot of business owners are not aware of it. It's not really gotten a ton of mainstream marketing or publicity. So I think for our smaller business owners, again, definitely something that you need to be aware of. But yeah, let's talk about what it is and how this came to be. So the Corporate Transparency Act, or the CTA, was enacted in 2021 as part of the National Defense Act. So laws that come through Congress and the like. But the CTA mandated that millions of entities report their beneficial ownership information, AKA who are the ultimate owners of those business entities. And that reporting is done to FinCEN, as you mentioned, so the Financial Crimes Enforcement Network. Again, it goes by FinCEN. So again, not a tax regulation or reporting requirement, but more informational. I think the best way that I could describe this is for those business owners that file, let's say, like 1099s, although those are filed with IRS, it's more of an information report, right? We're reporting to an agency information about someone or something else. So as I mentioned, the CTA was enacted in 2021, and then that required the enforcement, I should say, of BOI. And so effective this year, we now have to do this BOI reporting. It's part of the Bank Secrecy Act. And the real reason that this was enacted is to get a better sense of who owners are of these businesses, have a more keen oversight over potential money laundering, potential illegal activities that are being done within our US borders.
I really appreciate that breakdown. So that's, it's interesting because obviously the cannabis industry deals with a lot of issues in that we don't, there's some of us who do not have access to open and transparent banking services and those sort of things. But this is something that's trying to get to that transparency part of it, right? And I think a lot of the times when we're talking about safe banking, they're always talking about like trying to make sure that it's all legit money, right? And so is this really kind of also getting at that same issue of like trying to make sure that you don't have like foreign entities that are owning cannabis? Well, it's not just cannabis companies, any sort of company, but it's trying to make sure that it's not just foreign entities that are owning American companies. Is that kind of ultimately what they're trying to get at?
Yeah, I think that's a good segue, Kaliko, in that the purpose really is to make sure there's no illegal money entering, again, our borders here in the US and possibly funding, illegal activities or, again, another opportunity for money laundering. You'll know that most small businesses, when you go to Secretary of State and register your business, that's the extent to which you're reporting any sort of ownership. And depending on the state in which you're doing that registration, some don't even require detailed information about their owners. That's why some folks, may register in Delaware or Wyoming or states like that have privacy acts around who is the ultimate owners of these businesses. But because this is a federal requirement, all businesses in all states that are registered with, again, your respective Secretary of States will be required to file.
So I'm going to just underline that point. So you said all businesses at all sizes. So it doesn't matter if you have one employee or you're just a single proprietor, anything like that. All businesses in the United States ultimately have to file with this new requirement.
Actually, so there are some exemptions from this filing. The FAQ that's on FinCEN right now is about 38 pages long or so. So a pretty lengthy document with a lot of the answers to the 5 W's and who's required to file and who's not. But at the high level, again, there are about 23 categories of exemptions. Some of them include like publicly traded companies because ownership is disclosed in some other form or fashion. Another example is like banks and credit unions, tax exempt entities. Public accounting firms are also exempt. And there is one kind of operating entity type that's exempt, and it's called the large operating entity. To qualify for that exemption, the company must employ more than 20 people in the US. They have to have had or reported gross revenue or sales of over 5 million in their prior year tax return, and they must be physically located in the US. So you have to meet all 3 of those requirements in order to be categorized as a large operating entity, which is exempt from the filing.
That's awesome. And I saw Michelle on the back end was helping to show the page for FinCEN's website. So if you go to fincen.gov/BOI, then you can actually get some more information. I know you had said that it was like 30 pages long in terms of like what the requirements are, who's required to be able to file. But you can get all that information if you go to fincen.gov/BOI. We'll pull that page back up onto the screen here so you guys can take a look at it. We'll throw the link in the chat here as well so people can make sure you're checking it out here. I mean, you covered who is required, and obviously we're talking about where you report it. You go here to the beneficial ownership information page. Is there like a time frame? Is there a deadline? I know like taxes are very clear; it's on a certain date every year. Like what? How does this work when it comes to that?
Yeah, great question. Again, another one of the 5 Ws. So when must you file this new BOI report? So this is a little quirky in that there's different filing timeframes depending on when the entity was registered or formed with their respective Secretary of State. New entities, meaning registered after the enactment of the BOI, so after January 1, 2024, must file within 90 days. So if you created your company on January 1, 2024, you have until March 30th, 2024 to file that BOI report with FinCEN. So new entities that are created after 2024, so January 1, 2025, will only have 30 days to file. So they're shrinking that filing deadline next year. For existing entities that were created or registered prior to BOI becoming effective, so those again registered before January 1, 2024, they have a whole year to file. So you have until January 1, 2025. Again, there was some leeway given here in terms of timing to get everybody comfortable and aware of what the filing requirements are and just to give everybody some time.
Well, that's great to know that if you filed before or if you started your entity before this year, you had a 90-day window to be able to do it. But then if you're starting it anytime after 2024, it's a 30-day window. So that's definitely good to know. And I know we had said you got to go to the BOI page, but like, what does it look like? What kind of information are you actually having to put into the system or actually provide to the government?
Yes, some of the information is like your legal business name. Again, the purpose of this really is to report who are the owners. So they're going to ask personal questions about the respective owners. Addresses, social security numbers if you have them, and then the EIN of the business. So again, just some, I would say, readily available information. It's not anything that's not within your purview as the business owner. They're just wanting to know who the people are ultimately behind the businesses.
Awesome. And I know Gina's going to cover some more details as to the actual compliance side of things and what you actually need to provide to them here in just a minute. But is there anything else that from like the basics of like BOI, of like the importance on why people need to know about this, or sort of like the time frame that they need to be working on it? Because it seems like if you've not thought about this before, or if you've not done anything about it, you're almost past your 90-day frame, or you are past your 90-day frame. So I'd love to get into it with Gina about kind of what enforcement stuff looks like and what compliance looks like. But is there anything else that we should be letting people know about the basics of what BOI is right now?
Yeah, I would say in addition to those key deadlines, an important thing to note is that if there's changes within the ownership, let's say after you filed the BOI report, you are required to then come back and report those same changes, and you have 30 days to do so.
Awesome. Okay. Well, it seems like they got some pretty strict guidelines going on. So it's going to be very important for people to be on top of this. Gina, would love to bring you in and talking about sort of like what the compliance side looks like and what it actually looks like to operationalize this. I know we have a couple slides that we want to be able to share here. But Gina, if you don't mind just jumping in and kind of laying the stage for what people need to know when it comes to staying compliant with the BOI reporting.
Sure. So thanks for that intro, Jess. I'm going to now kind of get into the details and expand on what Jess just kind of went over with you all. So the first step in to determine whether or not your company is a reporting company or exempt from reporting. Like Jess mentioned, you can refer to the Small Business Guide that's been published by FinCEN. They have a very handy flow chart in there. It's on page 2. And then the list of exempt entities you can refer to are on page 23. I've got the URL right there for your reference on where you can find that small business guide. So step 2 in the process is you need to determine who are your beneficial owners. And what's the definition of a beneficial owner? Well, that's an individual who owns or controls at least 25% of a company, and they have substantial control of that company. An individual might be a beneficial owner through substantial control or ownership interests, or both. Reporting companies, they're not required to report the reason that an individual is a beneficial owner. A reporting company can have multiple beneficial owners, and there is no maximum as to how many beneficial owners a reporting entity can have. Now, what's the definition of substantial control? Let's get into that a little bit. Substantial control criteria is if the individual meets any of the 4 general criteria. We're on step 2. That's where an individual is a senior officer. They have the authority to appoint or remove certain officers or a majority of the directors of the reporting company. The individual is an important decision maker. I think we need to go back one slide, please. The individual has another form of substantial control over the reporting company. And what's the definition of ownership interest? That includes any of the following: equity, stock, voting rights, a capital or a profit interest, convertible instruments, options or other non-binding privileges to buy or sell any of the foregoing, and any other instrument, contract, or mechanism used to establish ownership. Now, FinCEN expects that every reporting company will be substantially controlled by at least 1 or more individuals. Therefore, every reporting company will be able to identify and report at least 1 beneficial owner to FinCEN. And again, for assistance in determining your beneficial owners, there is a handy checklist contained in the BOI Small Compliance Guide that I mentioned earlier. Okay, step 3. And then we can go to the next slide. Determine who your company applicants are. Now, who is a company applicant? That is an individual who directly files or is primarily responsible for filing of the document that creates or registers your company. Just mentioned this before. All company applicants, they must be an individual. They cannot be a legal entity. So if you by chance had your attorney create your organization and register your company, or another third party, you cannot name a legal entity as your company applicant. It must be an individual. Now, not all companies have to report a company applicant. You're required to report a company applicant if you are a domestic reporting company created after January 1 of 24, or you're a foreign reporting company first registered to do business in the United States on or after January 1, 24. You're not required to report your company applicants if you're a domestic reporting company created before January 1 of 24, or you're a foreign reporting company first registered to do business in the United States before January 1 of 24. So you don't always have to report a company applicant. Move to step 4. So, and Jess went over this briefly as well. We're going to get into more detail. What information needs to be reported by a company? So the FinCEN e-filing system requires a company to report the full legal name, trade, or DBA name, your business address, the state or tribal jurisdiction of formation or registration, and your IRS TIN. You also must report the details on your beneficial owners and company applicants, and that includes their name, their birth date, their address, a unique identifying number and issuing jurisdiction from an acceptable form of identification. That would include a U.S. passport, a driver's license, ID document issued by a state, local, or tribal government, and if none of the above, a foreign passport. They also have to provide an image of that document. Now, if you have someone that may have a number of filing requirements, maybe they are on the board of multiple reporting companies, they can apply for an ID through FinCEN, and that number can be used to identify them so they don't have to provide the image of their ID every single time. Moving on to step 5. So when does a company first have to report? Again, Jess went over this, but this is kind of a little visual table. The reporting rule was effective on January 1 of 24, and FinCEN began accepting BOI reports electronically through its secure filing system on that date. Existing companies created prior to 1/1 of 24 must file no later than 1/1 of 25. New companies created during 2024 must file within 90 days, and new companies created after 12/31 of 24 will have 30 days to file their first report. Next step, please, step 6. So when does a company have to file changes or corrections to a report? So companies that have changes to previous reports that they need to file, or a correction needs to be made, they must file those within 30 days. And those can include address changes, C-suite changes, substantial control changes, or ownership changes. Okay, let's move on to more on the compliance side of things. What happens if a company fails to submit their BOI report or doesn't update or send in the corrected information on time? If an individual discovers that a report filed with FinCEN contains errors and voluntarily submits a corrected report within 90 days of the original report's deadline, they will be protected from penalties under the CTA's safe harbor provision. Conversely, if someone intentionally neglects to provide complete or updated BOI as required by the reporting rule, FinCEN will decide on the suitable enforcement action based upon its established enforcement criteria. So what are some of the penalties of non-compliance? We can look at that in the next slide. The willful failure to complete or provide updated beneficial ownership information to FinCEN, or intentionally provide or attempt to provide false information, can lead to both civil and criminal penalties. The penalties may include civil fines up to $500 per day, as long as the violation continues, and criminal consequences such as imprisonment for up to 2 years and/or fines up to $10,000. Senior officers of an entity that neglect to submit a required BOI report could be held responsible for this failure. Jess, I think now you wanted to talk a little bit about a case that has kind of been brought forth.
I know.
Jess, we have you. You're back now. Go ahead.
Thank you.
Oh, fantastic. Thanks so much. Yeah, thanks for that overview, Gina. I hope the visuals really helped the audience kind of follow through all of those important details. But as we've been saying, this is a new reporting requirement effective January 1, 2024. And you can appreciate that there's been some backlash as folks are now having to really kind of give up their privacy, disclose all of this personal information. And there's been a lot of support from advocacy groups like the AICPA, the organization to which CPAs belong to, in terms of the legality of this reporting requirement. Also from the American Bar Association, again, around the legality and issues with now this new reporting requirement. We can all appreciate that ultimately it's for transparency purposes. But again, I think we've all been used to keeping maybe some things private, and now all of this information that we're required to disclose will be accessible by a couple of federal agencies, which I'll touch on here shortly.
And
But
Jess, I was just going to jump in and make the case,
yeah.
as you were saying, that some people are pushing back. There was an actual case that has already gone through the court system, right, where people are actually trying to challenge this and say that it's not constitutional.
Yeah, that's absolutely right, Kaliko. So as of last month, the federal district court in Alabama held that the Corporate Transparency Act, or the CTA, which requires the BOI reporting, is unconstitutional. So that is really kind of hot off the presses. It's literally in the last 30 days or so that court case came out. And so there is now more kind of wait and see, again, from these organizations and other advocacy organizations that are pushing for either a delay or complete dismissal of the BOI reporting. So while that court case has weight in Alabama, I think we're going to have to wait and see to ultimately determine if this is upheld or not. And we have to continue the BOI reporting. But let me be clear, even though there is this court case in Alabama, everyone is still required to report. As I mentioned, this is a federal requirement. And so this is just more wait and see and see what's going to shake out.
For sure. And I want to bring you back in here, Gina, too, because I know when I was listening to your presentation there, like some of the changes that could potentially trigger a need to update your form were things like even a C-suite change. So for instance, if you just swap out your CEO or a CFO or something like that, even that's got to trigger an updated reporting filing.
It could, because they could have substantial control. C-suite. So let's say there's a new CEO, CFO, maybe that could trigger an update.
Got it. So it still comes down to whether that C-suite person has ownership in the business. It's not just if they're a regular C-suite employee, but it's if they actually have ownership in the business.
Well, they don't have to have ownership only. If they have substantial control too. So they make just substantial control.
Okay.
Right? Yeah.
Yeah.
So it's both of those items, and if they change their addresses. Let's say you have the CEO moves and there's a change of their address, then that requires a reporting update as well.
Yeah, that seems like, somebody who's like just started a small business for the first time a few years ago, right? And has never really had to do all of these sort of requirements things. That seems to me like it would be kind of onerous. I obviously understand the purpose behind it, but I also can understand why people would be pushing back on trying to find like, what is that happy medium? And obviously, as Jess said, like we still have to report. And I think people in the cannabis industry are used to this, right? We're used to having one thing one way, but still having to go another way in terms of working with the federal government. So what are maybe some other changes in addition to changing out a C-suite member or even an address change that might trigger another reporting requirement?
I would say, again, we're in a pretty heavy M&A environment. So even those transactions, right? So if you are buying a new company, that triggers a reporting requirement that would need to be updated. Gina, I think, kind of honed in, it's a change in ownership or control. So again, if you're switching out key members of your organization that have control over decision making of the company, that's a moment that can trigger a change, an address change, right? So even something simple like that could trigger a change. And Kaliko, you kind of framed it up in that, small businesses generally have owners wear a lot of hats. And so something like this, where if I moved and just forgot to come back and update the BOA reporting requirement, could lead to fines or penalties. So it's definitely something folks need to be aware of. Again, I've not seen a whole bunch of marketing or PSAs around this topic, which is why we wanted to bring it to the forefront and make sure that all business owners that meet those requirements, whether you're in cannabis or not, you are required to look and report for BOI. I say that too because, again, for our cannabis operators here in the audience, you may have other entities, right, that have nothing to do with cannabis, maybe a management company or real estate company. This affects all companies. Again, as long as you meet those requirements, this is something that you'd have to look at.
Yeah, it's great. And when you're talking about, some of the fines that are levied, I think it was like $500 a day, up to $10,000 in fines. So yeah, those are substantial when you are a small business who's is wearing a lot of hats and got to make sure they're staying on and staying compliant with this sort of thing. I know that we had gone over that there are 23 different entities that are exempt from this. They got some of a spectrum in terms of who's got to report. But do sole proprietors also still have to report?
Yes. So the answer to that is yes. FinCEN is estimating that approximately about 32 million businesses will need to comply with this reporting requirement in the first year, so in 2024. And as I mentioned, this impacts sole practitioners, small businesses, mid-sized businesses. Anyone that doesn't meet that exemption is going to be required to file. And one of the questions that I've gotten is, doesn't my tax return already disclose this? Like, am I not already putting this information on something that goes to the IRS? Again, as Gina mentioned, the purpose of the BOI reporting is ultimately to get to an individual. And so on tax returns, there could be an entity level partner, let's say in a partnership that receives a K-1. We don't ultimately know who the individuals are via a tax return filing. So that's one of the purposes, again, of the BOI reporting.
Yeah, it's very helpful. I appreciate that. I do want to give just a plug for anybody that does have questions. We're going to have a Q&A section that's going to start here in just a couple minutes. So if you want to put some questions in the comments, we'll be sure to bring them up so we can ask Gina and Jessica while we have them here. Once again, Jessica's coming live from Benzinga's Capital Conference in Miami right now. So just taking some time and hiding into a conference room to give her some of our knowledge. So let's go ahead and utilize that. But, as we're thinking once again about sort of like this new thing, it's something that's just coming onto the scene, but people need to be aware of. You obviously have clients at Indiva who are already now subject to having to do this. How has that been in terms of working with some of your clients in terms of like educating them and getting them up to speed on these new requirements?
Yeah. So again, a lot of folks just don't know. And part of our process throughout the last couple weeks, last couple months since January has been around BOI, just making sure folks are aware of it, really working with them to determine who is going to file the report. Ideally, it is one of the owners that's doing the filing. But there could be other third parties, including CPA firms, including attorneys, if they're the ones that are, managing, let's say, the corporate structure set up for your enterprise. So really kind of figuring out who's doing what and when are we doing it. As I mentioned, existing entities prior to January 1, 2024 have a whole year to file. So we have until the end of 24 to get that report in. But this is probably most impactful for folks that are setting up new businesses in 2024. You only have 90 days to do the filing. So it's definitely something that we're just letting our clients know. It's not sort of business as usual where maybe they'll set up a company or two throughout the year, and then we find out, let's say at year end when it's tax time. This one really is going to involve more active dialogue and certainly, again, just awareness of the timelines associated with the required filing.
Thank you. And I see we're getting some comment or some questions in the chat, which I'll bring up here in just a second. But, as you were going through that and talking about some of the, the different things that people need to be thinking about as they're starting these new entities or the companies that you guys are already working with, what are some of the, I guess, let me think of framing this a different way. for people who are thinking about needing to do this and who maybe are a sole proprietor, don't have huge staff or a CPA firm they've yet hired to take on these sort of things, like how much time are we talking about in terms of investing into getting this reporting done? Like, have you, as you guys have walked people through that, what does that look like? And I imagine it's different based on how complex your entities are or your ownership is, but what can the average small business owner expect when they're going to fill this out?
Yeah, I think if it's a, 100% owner and you have all of the information that is required by the filing requirement, it really is maybe like 10 or 15 minutes. The actual filing of the form on the website is really user friendly. And they have a great FAQ article that we pulled up earlier, but great FAQs to kind of run down any questions that you might have. But in a simple, basic, minimal partner entity or enterprise, again, I don't suspect it would be more than 10 or 15 minutes. But certainly as your structure might be more complex, more owners, et cetera, then it may take longer.
Excellent. Appreciate that. So the next thing I want to go ahead and pull up this question from Evangeline in the chat, who asks, if an entity terminates this year, is it still required to comply and report? That's a great question.
Yeah, I'll take that one, Gina. But yeah, so if your entity is still effective as of January 1, 2024, you are required to report. That is the requirement.
Got it.
So irrelevant of whether you're shutting down this year or not.
Yeah, whether you're wrapping up or not, still have to get something in.
Yep.
Wow, that's interesting. Okay, cool. Well, I appreciate it. I'm learning a lot today, so I really appreciate you guys dropping all this. Once again, as a small business owner who knew nothing about this prior to planning this webinar, this has been very informative for me as well. So if you guys have more questions, feel free to drop them in the chat. But also for folks that just want to get more information or maybe ask some specific questions about their entity, their business, and whether they're required to report this or go in a little bit deeper, how do people typically get in touch with you guys and ask some of those deeper questions?
Yeah, please visit our website, indivaadvisors.com. We have a contact form there, and we'd be happy to talk to you about BOI and any questions that you might have with respect to the reporting. As a firm, we are offering this service, and so happy to help anybody out there that may be in need of that help.
Excellent. I appreciate that. And Gina, I don't know, is there anything else that you wanted to make sure that we covered today, or any other points that you wanted to make sure that we underline for folks as you covered the importance of actually getting this stuff done?
Yeah, I think we have a slide on some key takeaways.
Cool. If we can get Michelle to pull that back up, we can get that going.
Just some things for folks to think about as we kind of wrap up here.
I would say for sure it needs to be on someone's calendar. Like someone's has to be now responsible for the BOI reporting. Just like if someone in your group is responsible for the filing of the tax return, let's say for your business, or responsible for other compliance related matters. I just highly suggest that this gets on the calendar. It's something that is noted, and that there's appropriate processes to let that person know, hey, there's been a change. We have to go now update the BOI filing with FinCEN. So yeah, I just think that's so critically important in small to mid-sized businesses, since we wear so many hats. This is definitely one of those things that I feel can, not make its way to the appropriate folks unless it's on a calendar, some sort of notice, a tickler, something like that.
Yeah, great call about getting it on the calendar so people are actually taking care of this. Before we jump into the key takeaways, which I know we're going to bring up here in just a second, so let's have the question from Angelo. I don't know if it's literally the same answer as the last one, but I wanted to make sure that we give it a chance to answer this question as well.
Gina, did you want to take this one?
For Angelo, sorry, I missed the sole proprietor discussion. Since the client does not have a legal entity, is there a filing requirement? And I think Jess had mentioned maybe earlier that there may be. But as I understand, they typically apply to entities like corporations, LLCs, and other entities created by filing document with the state office. So sole props generally wouldn't be required to file a BOI report because they are not a separate legal entity. And I think that's maybe Angela's question. If they're not a legal entity from their owners and don't involve the creation of a filing of organizational documents. So think about that. If you did not file an organizational document with the Secretary of State, then that would be no. But if you did file an organizational document, then yes.
Thank you for that clarification, Gina.
Sure.
Specifically.
Absolutely, and thank you for the question.
Yeah, because you could register with Secretary of State or not, specifically for sole props. So as you mentioned, if you registered, you got to file.
Yes.
That's a great nuance. Appreciate that question, Angela. And thank you, Gina, for clearing that up. As we're about to pull up the key takeaways, Gina, go ahead, and if you want to go ahead and cover that, some of the things we want to make sure people remember as they walk away today.
Yeah. And so, and I'll touch on some of these, and I know Jess already mentioned them, but first you want to make sure you understand what are the requirements. Okay, are you a reporting company or not? Make sure you update your internal policies and your procedures. Do you have a process in place for if there is a triggering event that you have to file a change? Make sure you have a process in place. Training and communication. Make sure that people that may fall into a category of a beneficial owner are aware that this exists. There is a beneficial ownership information reporting requirement because maybe they at some point might fall under this. Compliance management software, like Jeff mentioned, you could put it on your calendar, but there's also software out there. Just make sure that you're staying up on those compliance requirements, that you're checking on, does this trigger a new report? Have someone do some regular monitoring and auditing. Make sure internally you're complying. Engage with your external advisors. That could be Indiva advisors. It could be your attorney. There are other third parties out there if you have questions or you need help. Documentation or record keeping. Make sure you keep note of why you deemed someone maybe not to be a beneficial owner. Make sure you keep that information on file. And then, of course, stay informed on regulatory changes as they occur. Like Jess mentioned, there's this case pending, so that could prompt some sort of a change in the future. So it's important to stay updated. Jess, anything you want to add?
So as long as everybody within the organization or company is aware of this requirement and it's on someone's to-do list, I think that is a winning plan to ultimately get a report filed. But again, the whole ignoring it, not doing anything is not a suggested move here. The penalties are pretty high and up to 2 years in jail as well, right? If they determine that there's some criminal activity that's happening in the background. So, yeah, filing is important. Transparency is key. And we're certainly here to help with any questions that you may have or the actual filing of the report.
Yeah, and just make sure someone is designated as who is responsible. Is that maybe you have a compliance person internally, a compliance department, or maybe the controller's office, someone of that nature. Those are usually those positions or offices that would be responsible for this type of reporting.
Hearing you guys wrap that up, it reminds me of the saying that if you if you fail to plan, then you plan to fail, right? So making sure that you have the plan, that you have someone who's assigned to it, that they're responsible and accountable for getting it done, that there's on the calendar an actual plan to get it done, rather than just hopes and dreams and knowing that it should have been done, right? So we really appreciate everybody who was able to join us live for the webinar today for another Indiva Empowers in our webinar series. We do this every month, typically the second Tuesday, unless things move differently in our schedules. But make sure you're going to IndivaAdvisors.com, signing up for our newsletter, following along on our LinkedIn and our other social media platforms. You'll be able to find out for our next one where we'll be talking about business planning. We also have some advanced tax strategy stuff we're going to be doing in June. So some really exciting things that we'll be working on over the next couple of months. And then once again, feel free to email Jessica at indivaadvisors.com if you have some deeper questions you want to ask about BOI reporting or anything else that has to do with helping to grow your business and make sure that your financial side of your business is taken care of. So Jess, unless there's anything else, we want to say thank you to everybody for joining us, and we'll see you guys next time.
Yeah, thanks everybody. Thanks for joining.
Thank you.